All right. Hello again, everybody. This is Mike Rixey. I am the lead options instructor for NetPicks, and this is our midweek update. Wanted to get a video out here walking you through what we're seeing this week in the markets. Today was a big day, specifically this afternoon. We had the big Fed statement out on interest rates, and everybody was waiting for this release all week long. I really wasn't expecting anything earth-shattering. I know a lot of people weren't, and that's really was the case this afternoon. Really nothing new out of the Fed, just a continued commitment to keeping rates low and doing everything in their power to prop markets up, right? So we saw the initial move after the release. Let me talk through that a second. And I'm just going to bring up a quick 5-minute chart of SPY. The news came out at 2 p.m. Eastern, right in this stretch right here. The initial move to the upside was a big move higher. Okay, we saw an immediate bounce to the upside. The tricky part about trading the Fed, the first move is oftentimes wrong. So everybody sees the initial move. A lot of times people jump into this move intraday. If you're a day trader, that's one thing. You can take advantage of that big range during the afternoon hours. But if you're a swing trader like me, you want to be careful about that first move because it's wrong in so many cases. It's really crucial to give it time. I don't come in at 2:01 after the news comes out and immediately start placing trades. I like to give it some time, let things digest, and that way later in the afternoon, after 3 o'clock typically, is when you really get a feel for the market's true reaction to the news. And you can see once we hit 3 o'clock, we saw the bottom fall out of the market here, right? That was when the Fed Chairman Powell, was doing the Q&A session. Markets immediately sold off, and we saw a pretty nice move down into the close. Closed right down near the lows of the session. Now, notice the volume down here as well. We saw light volume all day long, which makes sense given that everybody was waiting for the news. But look what happened into the close. Volume exploded there. There was definitely good volume going into the close. There's definitely some fear that kicked in to this market. So just be cautious on Fed days. I'm not a big believer in taking big positions anyway at any time, but specifically on Fed day, you want to be cautious how active you are before the news comes out. This is the typical pattern that we see. We'll get some swings back and forth, and then going into the close, you will typically get a good feel for what the market thinks of the news. So now how does that impact us? Big picture. Let's go back over to the daily chart. This is the daily chart of SPY, just with a variety of different simple and exponential moving averages up here at the top. And notice we have been pinned in between the 20-period moving averages. Those are the green lines up here. That's the simple and the exponential 20-period moving averages. And then you've got the 50-period moving averages down below us, both the simple and the exponential. We've kind of been ping-ponging back and forth between those levels. We really haven't been able to see any type of follow-through over the past week and a half. This is what we call the coiled spring pattern. For those of you that have traded SPY in the past, those of you that have traded some of the big tech stocks, you know that names that don't historically stay quiet for long, when they get into this type of a sideways move, at some point price is going to want to break out. We just don't know when that's going to happen, nor do we know which direction price is going to break in, right? So on the upside, the levels that I'm watching, 342.73. The dotted green line there, very, very crucial area of resistance. If that level breaks on the upside, we could see a nice little run here back up towards the high around 358.75. On the flip side, if we get some of the selling this afternoon to continue into the end of the week, if we break 332.75, that's the level of support that I'm watching on the downside. If that level breaks, we could see a nice continuation move to the downside. It is monthly expiration here. The September options expire Friday afternoon. Normally, when you get into monthly expiration week, you don't typically see big market sell-offs. You've got to keep that in mind. Not saying it can't happen, it's not the norm. Of course, in this market, what is normal these days, right? Anything can happen in this market. So just be cautious here. Watch these levels closely. See if we can get a break in either direction. If we do get a break, we do want to see volume confirm the move. Notice how on any down day here lately, see how volume has been pretty impressive on any of these moves lower? Anytime you see this market head lower, we definitely see the volume kick back in. On the flip side, any type of a bounce that we have had, you definitely see volume contract. Why do I bring that up? There's more conviction on the downside here, at least on those days that we do get lower. You want to keep that in mind as well. I want to see the good volume. I don't want the market to crash. I'm not saying the market is going to crash, but I want to see volume continue to be at good levels. I want to see volatility continue at elevated levels. If we take a look at the daily chart of the VIX, let me zoom in here. You can see the very active stretch. We saw the move lower. The tech names got hit a little bit here a couple weeks ago. We saw the VIX explode up to just over 38. We have since seen it come back down to around the 25 range. Okay, the VIX continues to stay elevated. I think that's going to continue to be the case going into the rest of this fall. We are going into an election cycle, right? We're already well into it, in fact. So we're going to get those sudden moves. We're going to get the volatility to stay elevated. I bring that up because we want to take advantage of that. As options traders, we thrive when there's back and forth movement. We don't want to see the one-way moves that continue, either higher or lower for weeks at a time. That becomes more difficult to handle. But when you get the back and forth movement, that's exactly what we want to take advantage of. And I'll show you some individual charts here in just a moment of trades that I am looking at here for the rest of this week. So, all in all, very productive start to the week. Now we want to see some follow through. We saw some damage done here this afternoon. What we don't want to see happen is just another buy the dip scenario here going into the end of the week. Let me bring up TradeStation. Let me bring up my other charting platform here, and let's talk about some of this in more detail. These are the charts that I actually trade off of. The daily charts that I just showed you, I use those charts quite a bit just to gauge overall market sentiment, the big picture view. I don't actually use those daily charts to time my entry and exit points. It helps me form an opinion on what I expect the market to do going forward. These charts here are the ones that actually drive my entry and exit points. We've got the 195-minute chart on the left. We've got the 130-minute chart on the right. So these are charts that I use quite a bit. I find that they're really dialed in to a swing trading approach. It'll typically give us holding times of anywhere from 3 to 30 days. That's what we're typically looking for out of our positions. If we take a look at SPY, this is the S&P 500 ETF. Our trend strength indicator, it's the blue and red histogram down at the bottom, is in bearish mode here. We saw it flip down below the zero line. This trade is currently in progress. Okay, this trade did trigger in here right around the 337.60 level. It's that blue cross that I'm circling right there. Notice how price action has just been pinned right on top of these moving averages here. All right, so what we've got there, we've got the 8 EMA and we've got the 50-period EMA. Price action has just been straddling those levels. We haven't been able to break away from those. Want to see those break lower for the sake of this trade that's currently in progress, but also, like we just mentioned, if we can get that move to the downside with some follow-through, it's going to make for a better trading environment. It's going to give us bigger volume. It's going to give us bigger range to work with. So ideally, over the next week or so, I'd love to see SPY move to the downside. Looking at QQQ, the weakness today was really in the NASDAQ. The Dow and the S&P actually hung in there, the Russell as well, actually hung in there for a good portion of the day. The NASDAQ was weak pretty much from the get-go. And you can see here on QQQ, the system is also in a short trade. This one actually triggered in back on September 4th when our trend strength indicator went red. We saw price action get down below our moving averages and we triggered short. We're in a partial profit at this point on the downside. Notice how today, this afternoon, we saw price action close back below the EMAs here. That's a good sign. Now we're set up for some follow through over the next few days, but we'll see. Is this another buy the dip scenario, or is the selling this afternoon on good volume? Do we have some staying power here on the downside? So we'll definitely take a look at this one as we wrap up the week. I'll circle back and let you guys know what ends up happening here. We've got a long put position here on the with the October monthly options on QQQ. So we'll see if we can get a continuation move to the downside. As far as target levels go, if we take a look at this 130-minute chart, you've got this low here at 266. I would love to see it get back down to that level and test it. Look for a potential support level there. See if we get a double bottom to develop there. I want to see how price action reacts. Once we hit that level, I'll be looking to really ramp the stop down and take some risk off of the trade. IWM, the Russell, you can see IWM actually was pretty decent today. It's been strong the last few days. So we've had this disconnect for the last number of months where we've got the NASDAQ that has been strong and the Russell's been weak. We have seen that rotate. We've seen that flip-flop over the last couple of weeks where the Russell is now strong and the NASDAQ's weak. The Russell's actually in a long setup here. Our trend strength indicator flipped up above the zero line, went from red to blue. Price action crossed above our moving averages, and we did get a long setup here. We are long from 155.22. The stop is down here at 156.17. This is a difficult scenario if you're in both of these trades where you're short on the NASDAQ, you're long the Russell. It can be difficult because now which way do you root for? In this market where it's been very sector specific, we haven't had broad-based movement. We always have one area that's strong. So in this case, if you're looking to trade, IWM and QQQ long-term, you really should be in both of these trades. Is there a good chance that one's going to win and one's going to lose? Sure. But in this case, we want to stay disciplined. We want to take those trades as they come. So on IWM, I am in a long call position out in the October monthly options, and we'll see if we can get some follow through there over the next few days. All right, now we mentioned that the weakness was in the NASDAQ today. The strength was really in the financials and energy. Those two areas there was really prevented any type of market-wide damage from being done. Here's XLF. You can see the trend strength indicator just went from red to blue here. So we actually did get a new long setup this afternoon, entry at 25.24. The reason I bring this up is we're going to have a tug of war here over the next few days between the NASDAQ, tech stocks, and energy and the financials. Which side is going to win out? That's going to be the million-dollar question here going into the end of the week. The financials have been weak the last few weeks. We'll see if they start to take the baton from the tech names and lead to another wave to the upside. So we are in a long setup on XLF. The stop is down at 25.52. XLE, which is the energy ETF. Again, the strength was in financials and energy today. Energy has been completely beat up of late, and we finally saw a nice little bounce here today. We saw XLE up almost 4% on the session. We don't quite have a long setup yet on the 195-minute chart. The trend strength indicator has not flipped positive, but we do have a long setup there on the 130-minute chart. This one did trigger in today, entry point at 34.20. The big test over the next few days here on energy is going to be to see, is this just a dead cat bounce, or is this the start of another wave to the upside? We'll watch this one closely. I did initiate a small position on XLE today with some long calls out in the October options. So we'll keep an eye on XLE here over the next few days as well. Let's take a look at some of the metals. Let's take a look at gold and silver. I mentioned earlier on SPY, on that big picture daily chart, we saw that coiled spring pattern developing. We've got that sideways move. It's been quiet. Now we're ready to break out. We're ready for a nice move. GDX, GLD, SLV, they're in very similar situations. They have been quiet. They've been consolidating here lately. They feel like they're ready to pop. Okay, you can see GLD, the trend strength indicator is positive. We're in bullish mode here. We'll see if we can get a break higher out of this pattern. Regardless of which way it breaks here, if we break higher or lower, there's probably going to be a good move out of this pattern. We've been coiled here for the last few weeks. We're ready for a nice move. So GLD, we're currently in a long setup at the moment. The long setup, the entry point was at 183.38. Looking for a move higher here. Where would we be targeting? First level to watch is right around 187. And then we've got another level up around 189.50. Those will be levels that I will watch if we break to the upside here. SLV, the silver ETF. The metal's very sensitive to interest rates, very sensitive to what the Fed does. So I was expecting more of a move here out of the metals, but we didn't get it. Unfortunately, this afternoon, we're still in these sideways patterns here on SLV. You can see, and we've just kind of been pinned between 25 and 26 for a good month now, month plus. I'm expecting this range to break out. At the moment, we're looking for a break higher as the trend strength indicator is bullish. So we'll see if that develops on the upside, see if we can get some follow through there on SLV. Targeting, initial target there, we've got an area right around 26.75, and then you've got a high up around 27.50. Those would be levels that we'd be watching on the upside. We have been able to close out of a couple of trades here this week. AMD, Advanced Micro Devices. We were short a call spread that we opened up end of August. AMD, you can see the nice move lower. We did get an overbought condition on our pulse indicator. That's what those yellow bars represent. It basically tells us that price actions between a 1 and a 2 standard deviation move on the upside. We're overbought. Doesn't mean price action has to fall apart. It just typically leads to either a sideways move or a reversal in the other direction. In this case, it was a reversal in the other direction. We came in and we sold the 86.88 call spread in the September 25th weekly options. We collected $75 per spread. We closed it out here. We closed it out for 24 cents. I'm trying to check my fill price on my other screen here. It was a $204 profit for us. It was a 41% return on our capital. So really nice trade there on AMD. And we're currently flat on the moment there, at the moment there. And on Netflix, we were long a put spread on Netflix that we closed out here to start the week as well. Netflix, I mean, you can see it hasn't been the biggest move to the downside, all things considered, considering it is a volatile tech stock, but it was enough for us. We bought the 485, 475 put spread for $470 per spread. We were able to close this thing out for $6. It gave us just a 28% return. It was a $130 profit. The reason I point this out is we were dead wrong. We put this trade on back on August 24. So it was right here, right in this range right here. Notice what happened within a couple of days. We saw Netflix explode. We were dead wrong on this thing immediately within 24 to 48 hours. Way underwater. Netflix, so important to control your risk. Keep that risk small because it allows you to stay patient. You don't have to overreact to every little move that goes against you. We were able to stay patient. This thing battled back, and it was only a 28% return. But considering that we were way underwater right after we put the trade on, big victory for us. So those are the two trades that we've closed out here recently. So we've had a really nice stretch. We really love the back and forth movement. In fact, with our NASDAQ option superstars program, we've had 16 wins out of the last 19 trades. So it just this movement is ideal for us. And again, we expect this to continue going into fall, going as we go to closer to the elections. I think it's going to be a great stretch for active traders. So I'll be back towards the end of the week for our weekly recap. We'll highlight what we're looking for going into next week. If you have any questions on those charts that I talked about here today, some things that we're looking at here going into the end of the week, feel free to email me directly. Mike@netpicks.com is the email address, or you can leave a comment here on the video or in the blog. So enjoy the rest of your day, everybody. I'll be back with you here as we wrap up the week.